All right, let's go over this setup. Let's go over setup. Gerald, go over crude oil first. Crude oil, what we have. We had a retest of my black hedge fund on my black charts. It was a beautiful setup. Been using that since 1996 all by itself. So we had major resistance there already at 77.40. It hit right at 77.40. Got my beautiful red fib dot. There it is, gorgeous red fib dot. Telling you look for an arrow for a possible entry short. Arrow's not good enough if you're waiting for the order flow bar. It's showing more supply than demand. This little triangle right here shows more supply than demand. It automatically comes up. Everybody's getting this in their email. Over, Gerald's going to start wrapping it up this weekend. You're going to see an automated triangle that popped up. That tells you one thing. That tells you you have more supply than demand. So we have a leading indicator that's telling us to get short right there to the exact bar. There's no thinking about it. There's no, oh, well, maybe I should get short. Maybe I shouldn't. If you're in a downtrend and you just hit resistance, that is a beautiful short right there, right on the retest with order flow bar confirmation. Because what's happening is when the triangle pops up, it's telling you there is a imbalance between the bid and the ask, or imbalance between supply and demand. So when I get a setup like this, on support or resistance, when I get a red fib dot, the arrow is automatically going to plot for you first. After that arrow automatically plots for you first, then what we're going to do is we're going to look for the automated triangle to pop up. Once the automated triangle pops up, that is your order entry bar. And then we're going to look to scale out at our symmetry dots, our automated symmetry dots that are below. So this is a valid supply-demand setup. We go over to gold, had a beautiful setup on gold this morning. Go to gold, Gerald. It's absolutely gorgeous. The 5 Sim Renko, one of my favorite time frames to trade off of. My 5 Sim Renko, it's my largest time frame I have in the trading room. I mean, in the off of J Signal, I suggest the 5 Sims, your largest time frame you trade off of. If you look at the 5 Sim, we had beautiful Fibonacci dots. We're in a hard downtrend. Look at my 5-minute trend filter. There's my 5-minute trend filter. 5-minute trend filter is right here on your own Ninja charts. You can see my moving averages were down. So you want to take sells off of J Signal. There's my red fib dots. Once a fib dot's posted, I got the red arrow telling you I'm in a possible Elliott wave 3 impulse wave pattern down. And there's my gorgeous, beautiful triangle again. Not what our opinions don't count. So Jim, when you're trading the system, don't blame anybody else but Jim if you don't pull the trigger. Because Jim's in control of his account, right? And Jim is going to let the market tell him what to do, not what Jim thinks he should do. Because we, as traders, will always be wrong if we go with our own opinion. We have to let the market tell us what to do. So on this arrow and the order flow bar, you have a high probability trade to pull the trigger there, because what you're looking at is more supply than demand, and that is where you want to enter the trade for a high probability trade. Now, if you look at it, you got the symmetry dots to scale out. The second set of symmetry dots call pretty much the low in that move. So that's another big move to the downside. Now, if you look at the next one, we never had order flow bar confirmation, did we? So what does that tell you? It tells you there is no order flow backing us up, meaning there's not more supply than demand. If there's not more supply than demand, then why in the heck would you even sell this arrow? Because you can wait for the triangle to pull you in. And that's just being smart. That's being more knowledgeable than your average trader, and that's putting your account in your own hands and by executing the correct way. All right, take responsibility for your trades. The market will tell you what to do. You should not tell the market what to do. You should let the market dictate when you're buying and selling or pulling that trigger. If you're going to risk your monies, then you must let the market tell you what to do, when to buy and sell and enter these orders. The order flow bar or the triangle at the arrow will let you know where the high probability trade is, because that is where there is a possible big order imbalance. And if there's a big order imbalance, that's exactly where we need to place our monies, because that's a high probability trade, and we nailed crude oil this morning because of it, and we nailed gold because of it. We're 1 for 1 on gold. We're 1 for 1 on crude with the order flow entry bar. And it's all based upon waiting for the fib dot, waiting for the arrow, waiting for the what? More supply than demand, and both of them worked out, okay? Because you won't take this second one because there's no what? There's no confirmation. There's no confirmation. Since there's no confirmation, it's a very low probability trade, and it's a second test anyway, which you wouldn't do anyway. So it's very simple. Let the fib dots pop up, arrow, triangle will do what? The triangle will let you know when there's a possible imbalance in orders. If there's an imbalance in orders, you got a possible real nice move to the downside, and that's what happened on both trades. All right, it's that simple. Don't make it any more difficult than that.